Hello, undisputed trader. Today I want to talk about how to use fair value gap. You understand? It is a crucial concept in the forex or in the trading world. You understand? You can use it in the crypto, stock, anything, whatever you are doing. It is one of the important concepts when it comes to trading. So today let's go to my screen so that I will show you how to use this concept effectively. Okay, as you can see, we have we have first we want to define the fair value gap and how to identify the fair value gap. You understand? Okay, a fair value gap happens when there is an imbalance in the market, when there is an excessive buy or excessive sell in the market, when there are more buyers than the seller. The candles that will be printed in such scenario will be an impulsive candle, and these three set of impulsive candle have a gap between them. You understand? So that is essentially the fair value gap, the imbalance that is left behind. This place, let me take a pen that is stronger. You understand? Let me choose a pen that is more. So this place here is the fair value gap. You understand? This is the first candle, this is the first candle, second candle and third candle. You understand? So the space between the first candle here and the last guy here is the fair value gap. The space between the wick of this candle and the wick of the last candle, it is the fair value gap. So that is how to identify it. Now let's go to how you can actually use it to trade. The whole concept is that price will normally return to this fair value gap 80% of the time. So let's go to how you can use it to trade. So this is it. The idea is that price will normally return. You understand? Price will normally return to this zone. Price will normally return to this zone so that you can use it and find your entry from here to the upside. You understand? So you have to wait for the price to return to this zone, then wait for your candlestick formation, then you can now trade it to the upside. You understand? So this is how to use it. This is just the idea. Let me make it clearer for you to understand. So this is it. So this is it. The idea is that price will normally return to this fair value gap for you to trade it. So I want to make the candlestick bigger now so that you can see it. See, the price will return to this zone, then you can now trade from this zone once the price return to the zone with your confirmation candle. So now we will talk about how to use it as an extra layer of confirmation when you have deduced the structure of the price. You understand? So it is not advisable to use fair value gap alone. You have to use it in conjunction with other method, with other confluences in the market. So okay, let's go now. If you want to trade this thing, you want to use fair value gap for your confirmation. You understand? So this is a price trending downward. You understand? This is a price trending downward. You want to make sure you wait for a change of character. You understand? And when this change of character occur, you understand, this is a change of character. We call it COCH. You understand? This is a change of character. Once the change of character occur, you cannot enter aggressively and start buying. You understand? You have to wait for price to return to this fair value gap here. You understand? And this is the fair value gap. The price return to the fair value gap, then that is when you will not be rest assured that if you buy the market, the chance of winning the market to the upside will be very high for you, because the price return to a fair value gap, coupled with the fact that we have already have a market structure shift. You understand? We have already have a market structure shift from this place. This place alone has shown us already that the price has broken towards the upside. You understand? Previously market forming higher lower low, lower high, lower low, lower high, lower low, and all of a sudden the market breaks it above. Now, as the market breaks it above, our confirmation now will be fair value gap here. Once the fair value gap is filled, some people call it internal liquidity. Once the fair value gap, which is the internal liquidity, is filled, we can now buy the market to the upside. You understand? So let me show you on the real chart how this thing works. So on Euro USD now, okay, you can see clearly that the market is coming down. You understand? The market is forming lower low, lower high, lower low. But on this lower low here, if you want to enter the market, the next phase of the impulse to the downside, you want to enter it from a major zone, and this is it. This is the major zone. You can see it clearly that the market reversed exactly from this zone. You understand? The market sell aggressively from this zone. Why? Because this is a fair value gap. Do you understand? The last candle here and the last other candle here, there's a gap, and that is exactly where the market sell from. You understand? I can show you many examples on and on, and you can use it to your advantage in the market. You look at this guy now. After this massive sell-off and the market returns to this zone again, what do we see here? We saw a massive sorry we saw a massive, after the sweep of liquidity here, we saw a massive sell to the downside. You understand? What happened? The market touches this fair value gap, although it was not a sweep right to the downside, but eventually the price return. You understand? The price return to the downside. You can check many other examples. You can see this is a fair value gap here. The market returns to this fair value gap. You will see a huge rejection to the upside. Likewise to this zone. All of this zone, you can take it as your fair value gap. Why? Because the gap is in between the first candle and the third candle. So when the moment the price return to this zone again, what do we see? Although this was not a clean buy to the upside, but at least it touches the fair value gap, giving you a hope that the market will return to the upside. So it is now left for you to find your common entry method. You understand? So this thing works. It works, guys. So your own is to first of all find the structure, find where the market is heading to. You understand? Then you can use it. Look at this. Look at this place now. Look at this. After the massive run down, the market push upward. You understand? And where the next time the market returns again, it is in this place. The market returns to this zone exactly, which is the fair value gap. You understand? So the market returns to this fair value gap, and what happened from here? It was a massive buy to the upside. So this thing works. It works, guys. And again, if you want to join my community to learn from me, if you have learned something from me, please smash the like button, follow me. It doesn't matter if I'm a small YouTuber or not, but the end of the thing is that I'm giving you value. And if you like the value, just smash the like button, subscribe, and follow me. And I have a Telegram community of like-minded traders like you. You can join me so that we'll all share knowledge together and grow together. Thank you. I'll see you next time.